Let's introduce now on the show Andrew Holland, the CEO of Avendus Capital Public Markets. Andrew, thanks so much for taking our time and joining in. And let me start off with a bit more of a macro question. I think what really triggered that downward move in the equity markets and then subsequently the whole range-bound move in markets has been that big spike in yields, which in turn was prompted due to inflation fears. Now, this is going to be an important week from that point of view because we have a trio of central banks that will be releasing their commentary, starting with the US Fed today. What sort of an impact do you expect these to have on the yields? Because, in all probability, I would expect some of the chiefs of these central banks to maybe talk down yields to a certain extent.
Yeah, you're absolutely right. I mean, they're going to come out with all the soothing words that we'd like to hear, that they're not worried about inflation, that it will take anyway, even if it kind of rises in the short term, is well within the range, and they can live with that for longer, and they'll point more towards unemployment, picking up, starting to fall rather than inflation. Now, I think there's a few problems with that. I'm in agreement in that, you're at the early cycle part of inflation where, global economies are picking up, exacerbated, I think, by the container shortage as well. But, as economies open, then, more capacity comes online and some of those prices start to dip. So I'm with the Fed and the central banks there. I think the problem lies in what happens when, the vaccines have been rolled out in a lot of countries, particularly the US and UK and elsewhere, and people start spending money. And then your services, a lot of those sectors which have been hit very badly, start employing people again. And that your unemployment figures could fall quite drastically. And that would again put, kind of more sticky inflation because, people spending, people getting more money in the pockets because they're now getting jobs. I think that's what the market's going to worry about. And that's why it's going to be volatile. And that's why it's a little confusing at the moment because you're looking at some of the very short-term trends, which will probably kind of ease off before possibly picking up again. So, all the forecasts you're starting to see now, and just taking the US, for example, is that GDP growth is now, kind of going from that 5.5% to 6.5%, 7% for the current year. And in 2022 from 4 to 5%. So you can see that acceleration of growth is already happening, and that's what markets are worried about. The only one area which obviously could help in the short term in terms of keeping inflation lower or prices lower is the fact that Europe's doing another lockdown. Obviously, they've made announcements about the vaccinations from AstraZeneca. No, they haven't given any timeline of when they might resume or not. But obviously that would put the European Union under a lot of pressure in terms of downward pricing, but also the economy would probably have that double dip. So that might be, again, a short-term saving grace for inflation if that was to play out for much longer than we expect.
Okay, all right. So Andrew, in light of that, and in light of what the trends that we are seeing in the markets currently, we are seeing the whole theme of perhaps value coming out in a bit more of a stronger manner, where investors do believe that now is when that whole bottom-up approach and the theme of finding those undervalued stocks and investing in them will shine, which by the way hasn't worked in the last 3-4 years. Do you believe that that's a scenario we'll see now?
Yeah, I'm not necessarily kind of trying to play the growth versus value story. I think as the economy, not just in India but globally, kind of picks up and there is inflation there, then it's going to be the sectors which do well in that type of economic growth, which is obviously your banking sector, industrials, consumer discretionary, and energy, and that's what's been playing out, and that's that will continue to be the case as the economy starts to move. Now, was the value there in some of those sectors? Yes, there probably was, because it was all the kind of growth sectors, which are growth and safety sectors, which were performing during COVID. The kind of first 9 months of COVID, and obviously that's the shift towards the economic recovery type of stocks, which would have had some value, but I'm not saying that that they're cheap by any means. A lot of them have moved up very quickly, so I'm not sure it's a value versus growth play. I think it's more of a shift towards those sectors and companies which will have a greater earnings growth compared to where we were, say, 9 months ago.
Now we're going to be discussing IT numbers. April 14th is when Infy is going to be declaring its numbers. But what with the strength in mid-cap IT, and do you feel that there is a far greater chance of better earnings growth when it comes to mid-cap IT?
If that was for me, then I think obviously, listen, I think the whole IT pack is getting a tailwind for many, many factors. Obviously, the whole kind of growth globally, digitization, cloud, all of that. So all of the sectors, all of the companies, is coming all together at once. Now, the question is, to my mind, you want to be with the large cap or the mid cap. I think a barbell approach to them is probably the right way to play it, because, you want to be in those niches, for some of those which are playing more digitization, a little bit more, could be more nimble than some of the large caps. So I think that barbell approach across the sectors, which they're serving, is probably the right way forward, and that's what we've been doing.
Andrew, good to connect with you. I'm speaking to you after a while. So Andrew, what are you telling all your uneasy clients? The clients are uneasy because some of them have not participated. They're uneasy then when they can participate, and some clients are uneasy because they've made gains and now they want to know when they can cash out. So I can sense that there is unease on both the sides of the fence.
You're right, and I think for by and large, I think a lot of the kind of clients that we speak to have been taking some profits off the table and saving for a rainy day. But the problem is, where do you put that money? Given yields on kind of alternatives in bonds are so low. So maybe somebody's getting into the real estate market, but I think that is the problem, is that once you liquidate or you take some profits, where are you going to put your money? And I think that's one of the biggest problems that investors are facing is that uneasiness of being in a market which they think could see a correction, but they're not knowing what to do once they have those proceeds for any kind of realizations they make. So I think for a lot of them have taken those individual stocks, I think, but I think are still holding in there. I think for the new investors, we're still continuing to see that they'll come in, maybe not in terms of kind of putting a whole amount in at the first pace, but maybe kind of buying on rises and a certain amount, or on dips as well. So that's how they're playing it. But they're very much looking at if you remind people that from 1 year ago to where we are today, the market isn't so high in terms of where we were. I think they come to realize that yes, you saw that big bounce from the bottom, but in year over year, you haven't really made that much money.
Andrew, the theme, which in a sense is a very powerful theme, is that you got to align your portfolio towards EVs, electric vehicles. Now that could be a very powerful theme, and trends and news and what companies are telling us that all of them are adopting and embracing this theme. How do you propose one should bet in India if when it comes to the EV theme?
So it's a great question, And in terms of, who would you put your money on to come out of it and emerge as the real winners? I think that's difficult globally as well. I was hearing an interview by the CEO of Porsche, who's very confident he can take on, the likes of Tesla. So I don't know who the winner's going to be, Nikunj, but what I do know is that all of those auto parts suppliers are going to be, supplying to each one of these. So whichever comes, out the winner, they will be supplying. So I would rather play electric vehicles at the moment through the parts suppliers than I would want to buy and take a bet and saying, yes, this is, Tesla is going to be the only one that's going to be dominant in the next 1 year or 5 years from here. And I don't know who that would be in India. So, we're still at a very nascent stage here. So I think playing through the auto parts is a safer way, to kind of cover your, all the angles of the growth in the electric vehicle market going forward.
Andrew, this entire churn from growth to value and from consumer to cyclicals, you think that trade has now extended itself? Because if the economy will do well, consumers will also do well. If the economy will do well, the demand for cars, the demand for staples, the demand for consumer durables will also be strong.
Nikunj, if you go back, and I tried to kind of answer that before in that I'm not trying to play value versus growth. I think if you go back to, after the market bottomed in 2009, the sectors which really performed well because you had a global economic recovery and India recovering as well were banking, industrials, consumer discretionary, energy. And there's no different this time around. These are the sectors which are going to be the big beneficiaries of not just global growth, but local growth. So, for example, how do you play the housing market in terms of stocks? It's very difficult to do that. But, there's a whole plethora of stocks which, will have some form of input into a house, where from cement to paint. So you can, decide where you want to kind of place your bets. So that's the way, we're thinking. It's more, your value becomes a growth stocks. They might have just been, left alone for some time because obviously we're during COVID times, we're looking for growth with stability and security. And that would, is your FMCG, IT and pharma to some extent. Now we're looking at, seeing growth a lot quicker than that in all of these sectors. So there was some value there if you would have picked it out in, March, April, even up to, I would say, June of last year. But you would have sat there for quite a long time underperforming until recently. So I still think there's a long runway for these sectors to go because, if we're talking about, 10% GDP growth next year, earnings growth 32%, and with the government, spending more on infrastructure, it's a very powerful argument that if you get the housing sector moving and the infrastructure sector to moving, then you've got a multiplier effect across many, many different industries, which I've just mentioned, which will obviously, power earnings growth, considerably going forward. So that's a longer term kind of view or medium term view. And that's why I think, that barbell approach that I talked about this before, Nikunj, having some of those, the IT stocks, having some FMCG on one side of that barbell, but, for the growth, you've got to be in those sectors I've just mentioned.
Do you not think, on the subject of EVs, that a safer way of playing the entire EV story is via ancillaries? Because while we don't know who's going to win the EV game in India or how the infrastructure is going to pan out, but whenever they do commercially hit the roads in a big way, they're all going to need tires, they're all going to need that paint job, and they're all going to, need your airbags, etc.
Yes, and that's the way we're playing it. It's rather than trying to spot the the manufacturer of electric vehicles, we'd rather go with the parts supply because they're not just going to be supplying people in manufacturers in India. It's going to be globally as well, and they'll still need the same kind of part, whether it's it's a Porsche or it's Tesla or whoever going forward. So it's these auto parts companies which is a place that we would be really looking because they will be supplying all of these, and any one of those could be a winner. I mean, I'm not saying that Porsche or Tesla are the only two. There's many more, but I don't have to kind of work on who's going to be the winning vehicle going forward.
There's Coforge, there is Emphasis, there is Mindtree, there is LTTS, that's L&T Technology Services, then there is Naukri.com. Andrew, out of the 5 IPOs which are on, and there are a lot of IPOs followed by QIPs, suddenly do you think we could be staring at a liquidity vacuum? Because 5 IPOs, these are large IPOs, and then you got a QIP, which one came from Max, another one from Godrej. So corporates are using this market and benign liquidity conditions to their advantage to raise capital. Could this create a demand-supply mismatch in the short term?
It could well do because one of the things you alluded to before was what do investors do who have not come into the market and maybe rather than coming into the overall market, they're using the IPOs as being one way of getting access to good companies with good prospects who initially the IPO price are reasonably valued and thereafter become expensive sometimes. So I think that's where you could see liquidity moving. So you're right; it could have that kind of temporary effect of just stopping people jumping into the market where they feel anyway the market is kind of ready for a correction. So it gives them the opportunities to keep playing around, keep their interest in the market through IPOs. And at the same time, also making good money if they get hold of the shares. So I think that kind of falls into what you were saying actually. So it makes sense to me.
Naresh, I wanted your take on consumption, and actually let me shoot that question across to you, Andrew. I mean, I know we spoke about this earlier, but what do you think of the consumption pack? What's your take on it, or would you rather go with the ones that have been doing well, IT, pharma, etc.?
I think where we're looking at in terms of probably more spending in what people will do once lockdown continues to ease across India. Well, first of all, we're coming up to the kind of holidays for children over the next 3 to 4 months, and you certainly can't go anywhere. Maybe you can get to the Maldives, but you're certainly going to spend most of your time in India. So I think whilst there's some restrictions on hotels in terms of occupancy, I think it's the hotel, the airlines, hospitality sectors, which I think are going to do very well. I mean, you try booking a good restaurant in Mumbai at the moment; it's nigh impossible. So we know that people will want to kind of do whatever they can for their experiences to get out from where we are in our own homes and start enjoying some form of activity, and that obviously involves spending. So I think this is the area that I've been looking at, and there's a lot of value there if you look at the value type of stocks. But they do become growth because if the hotels occupancy gets higher and the revenues start to be increased in terms of the prices that you pay, then you'll see a very, very big increase in earnings because of the operational gearing there. So I think it's a very interesting time if you take a view that we're not going to have strict lockdowns going forward. Then these are the sectors I've been looking at now as being the areas where you could see a lot of spending. I mean, for example, we were discussing the other day that marriages will obviously come back with some kind of I'm not saying vengeance spending, but more spending. So would you spend more on the banquet rooms, or we spend more on gold? And the answer came as being more gold. And therefore, where would you go and buy that? So, then you can identify the stock. So I think these themes are going to start playing out, quite rapidly over the next 2 to 3 months. So that's where we've been looking recently.
Well, Andrew, thanks so much then for joining us this Tuesday afternoon to just give us a sense of what your view is on the markets and the direction it could take going forward.